my chips, I'm getting rich. Running up digits, counted up 6 stacks. My money flipping, let's take a trip. Splash, standing on business, tycoon rich. I'm rich. Look at my chips, I'm getting rich. Running up digits, counted up 6. My money flipping, let's take a trip. Splash, standing on business, tycoon rich.
Good morning, everybody. Let's get this thing started today. Happy Tuesday. We're gonna take a look at the markets, see if we can find some good setups, and then we're gonna get right into it. Okay. So just to kind of go over a preliminary of what we actually trade. I trade the NASDAQ 100. Okay. And so for those of you all that aren't familiar, it's an index that caters to investors interested in innovative, growth oriented companies like Apple, Microsoft, Amazon, and others, offering a diverse selection of industry leaders, driving economic progress and technological advancement. Okay. So let's go to NASDAQ and see what the companies are here. Okay. Let's see what the companies are here. All right, so here are some of the companies that are listed for NASDAQ, just so you guys can kind of get some understanding of that. All right, so let's go to the consumer discretionary. You'll see some companies that you all are familiar with, like Costco, Starbucks, all right, Lululemon. Okay, these are some companies that you all might be familiar: Monster, Pepsi, Coca-Cola. Okay, so these are very well known companies that are comprised in this index, and we trade the value of the index to see if it's a good buy or sell for that day. Okay, so what I'm going to do is I'm going to get right into our rules. Okay, and these are the rules that we use when we're trading. So this first step is use the STC indicator via TradingView on the 15-minute chart to determine directional bias for the trade. Okay, so what that looks like is this here. Let me go back. Let's go to the charts for 1 second. Okay, so here's our STC, and I'm gonna go to the 15-minute chart. And so for those of you all that aren't familiar, the 15-minute chart just means that every candle, it takes 15 minutes for each candle to close. Okay, that's what the 15-minute chart. If you're on a 5-minute, it means that it takes 5 minutes for every candle to close. Okay, so here's our STC here. Okay, and based on the STC, we use that as an indicator to help us determine directional bias for today. So when we're looking at the STC, I always use the analogy of a roller coaster. So I'm going to take off my levels 1 second so you guys can see a clean chart here. Okay. I always like to look at it from a sense of like a roller coaster. So if you're on a roller coaster, when you're at the bottom of a roller coaster, you're expecting for the roller coaster to go up. When you're at the top of a roller coaster, you're expecting for the roller coaster to go down. Okay. And you just kind of get this movement here. All right. So when we're looking at current price, and let's just say I'll just draw these two lines here. We'll say that this is the 20 and then this is the 80 here. Okay. All right. So let's just say price is here. Okay. We already expect when we're at the bottom of the roller coaster to go up. So in this case here, we're expecting when we're at the bottom of the STC for price to go up. Okay, for price to go up. Now, it doesn't always happen instantly, but eventually price corrects itself. So we have to be optimistic about that and also objective about the direction. Okay. So this area here is called oversold, meaning the market sold off a significant amount, and at some point it has to correct itself and start to buy. Okay. So when we are looking in the oversold area, we want price to go up. So that means we're looking for buys. So for buys, we want price to go up. For sales, we want price to come down. Great thing about the futures market is you can make money regardless of what direction you're in. And that's why I always say it's a great tool and skill to have, especially when it comes to being recession proof. Okay. So that's oversold. Now, when we're at the top, let's say that this is the top of the roller coaster. Of course, we're expecting it to go down. So when we're at the top here, this is considered overbought. So we're looking for price, right, to go down. Okay, so we're looking for sales when we are overbought. We're looking for sales when we are overbought. Okay, so overbought is when price is above the 80 here. Oversold is when price is beneath the 20. Okay, and this is the 20 and this is the 80 here, these lines here. Okay, some people have different configurations for that, but that's just kind of like a general number for it. Okay, so if we come back down here, look at our STC. This is current price right here. All right, current price right now, all right, is oversold. Oversold. Current price is oversold. So that means our directional bias for today is a potential buy. Is a potential buy. Okay, we're on the 15-minute chart. Remember, step one, we go to the 15-minute chart. Okay, we go to the 15-minute chart to determine directional bias based on the STC. Here's our STC. We know that when price is oversold, right? Think of the roller coaster. We're expecting it to go up. Okay, so we're looking for buys. So our directional bias for today is buys. Now, here's the part where you have to be objective, okay? And I'm going to put my levels, my key levels back on the chart. Okay? Here's where you have to be objective. So yesterday we found some support here, okay, in this area here. All right, and price just kind of stayed and it started to move after it broke out and then pushed up here. It kind of moved sideways. All right. So what we have to be conscious of is what happens at this specific level right here. Okay, this level right here at where are we at? 21,267. 21,267. Okay, so this key level right here is very significant because we can see price just kind of stayed in this little area right here. Okay, it bounced up here and it found support. So price can find support here, right? We can retest this area and find support again, which will be great for our buys. Okay, and I'm going to explain why support is great for buys, also known as the demand zone. Okay, supply and demand. Um, and that would be a great buy because we already see that price has found support here in the past. So every time price came down to this level here, it found support. So if we do get a buy here, there's a high chance that we can convert that into a nice winning trade. Now, the other side of it is when we are oversold, that doesn't mean that the market is ready to correct itself. Not just yet. Okay, so that can mean also that the market is still selling off. The market is still selling off. So, what we're looking for at this level is some level of confluence telling us that the buyers are present here and they have strength at this level. Okay, so how do we know that? What are we looking for to determine that? Let's go. Let me go to my 5-minute chart. Okay, and I'm gonna talk about rule number 2, and then I'm gonna talk about what to kind of look for at this significant level here. Okay, so right now I'm on a 5-minute chart, meaning every candle it takes about 5 minutes to close. It takes 5 minutes to close. Okay, so I'm going to go to rule number 2. Okay, let me go to rule number 2. Oh, Kelly, thank you. You said I just love the theme music. I appreciate that. Yeah, I really do. I appreciate that. Yeah. Okay, so we are we're on a 5-minute. All right. And let's see here. Let's go to rule number 2. Let's go here. And we do have news at 10 o'clock, guys. So we'll touch bases on that as well. But let me share the second rule here. Okay. So the second rule says once you have determined directional bias, wait for the STC on the 5-minute chart to align with the 15-minute chart STC and wait for the alert. So if we go back to the chart, what does that mean? What we would like to see, we already determined on the 15-minute chart that price was oversold in this area here, okay? So I would like to see price to come down in this oversold area as well to align with our 15-minute chart. Now that always doesn't happen, but when it does, it's normally a good setup, okay? So we want price to come into this oversold area probably within the next 15 to 20 minutes or so, okay? Now, if that happens, what we're doing is we're now, because we're looking for a buy, we're waiting for a buy signal. Okay. So we can see here. Let me just zoom out just a little bit so you guys can see. Look at how many significant buys we have at this level. Okay. We have 1, 2, 3, 4, 5, 6 significant buys at this level. Okay. Now, when prices is kind of moving sideways and it's kind of ranging, it doesn't stay that way all the time. Okay. So we have to expect a potential breakout. Okay. So if a potential breakout happens, that would not be surprising because think of it like a wall, right? And if you're banging a hammer on this wall multiple times, eventually it's going to break. Okay. And that's your breakthrough. All right. Same thing on the upside, right? So if you have resistance, 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 eventually it's going to break. Okay. So that's how I'm looking at this level right here. Okay. So now let's go and let's look at, and guys, please feel free to ask questions as I'm explaining this information. I try to be as open and transparent and try to teach as much as I can during these sessions. Okay. So great morning to everybody that's joined. All right. So let's go back to our second rule. Okay. So we're looking for a buy signal somewhere in this area will be ideal. All right. We have a couple of levels that we would at least try to retest here. It just depends on how strong. If this candle does give us some buy signals, that's how it depends on how strong it looks there, right? So I will probably look here for TP1 and here for TP2 if we do get into a buy. Okay, if we do get into a buy. All right, so now let's look at our support and resistance levels, and then we're going to talk about um, risk to reward while we're waiting. We're going to talk about risk to reward while we're waiting. Okay, so let's go here. We see that this level, I'll use these two lines here as our support and resistance. Okay, so support, think of it as your floor. Okay, here's support. Think of this as the floor. Resistance, also known as the supply zone, is your ceiling. Okay, it's your ceiling. Okay, so support is the floor, also known as demand. Okay, resistance is your ceiling, also known as supply. All right, now when we're looking at this, okay, so we have our support and our resistance. All right, I always use my ball analogy. If I throw the ball down to the floor, the natural reaction is for the price to bounce up. Okay, the direction we want for our buys is for price to go what? Up. Okay, so if we find a buy, okay, at a support level, that's a high probable setup. All right, so let's look at this, because every time price came down to this point right here, this level right here, okay, this 2167 level, it found support. Okay, think of the ball. We threw the ball to the floor, so the candles came down to the floor, and now it bounced up. The candles came back down to the floor, and what happened? The candles went up. Okay, so that's our support, and so that's why when price comes down to this area, somewhere in this area, if we get a buy, it's a high chance that price could bounce up because it's already shown us in the past, all right, that it found support here. Okay, there are buyers here. All right, think of it as a demand zone. When there's a high demand for anything, people buy up the product. People buy whatever it is. Okay, this area right here is a demand zone where people are buying. Okay, they're buying at this price level. Okay, so now let's look at resistance. Resistance is a little bit different. It's basically the opposite. Okay, so with resistance, we are looking at something different. So if we go here, resistance is our ceiling, right? So if we look at our ceiling here, okay, think of the analogy. If you throw the ball towards the ceiling, okay, what do you see? The natural reaction is for price to come down. Okay, the natural reaction is for price to come down. Okay, so in this case here, you'll see every time price came to this 21,322 level, we found resistance. Let's just say that this is the ball. It was thrown that to the ceiling. And what did it do? It came down. Came back to the ceiling. What did it do? It came down. And just repeats this pattern over and over again. Price is trying to break through this area, but there's a lot of resistance. Price is resisting to break past this area. Okay. Now, eventually, it broke out. Okay. Remember, I was saying as far as like the hammer analogy, if you bang on on the ceiling multiple times, eventually you're going to break through. Okay. So it tried to break through here. It failed. There was resistance, 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 and then it finally broke through. Okay. So our resistance area, also known as our supply zone, is our ceiling. Okay. So if we're looking for buys, we want the buys to happen near support on the floor, near the floor, right? If we are looking for sales, we want the signal to come in near the ceiling. Okay, near the ceiling if we're looking for sales. All right, so right now, as we already know, our directional bias is a buy. Okay, and so we're looking for price to potentially go up here. But we are also remaining objective because if price breaks through, pull back, and gives us continuation, then we have to look for sales. Okay, we have to look for sales. So we're going to pretty much see what that looks like. All right, so we have our setup. We know what we're looking for. And here's a potential buy signal coming in. It's 9:02. It's kind of early, but we'll see. We'll see what these next two candles look like. Okay. Now, while we're waiting for that, let's talk about risk to reward. All right. Risk to reward is one of those things that is very, very important as a trader. If you don't have good risk management, it's going to be very difficult for you to buy. I'm sorry. It's going to be very difficult for you to be successful long term, okay, to continue to grow your account. All right. So let's go take a look at the chart and let's see what I mean by risk to reward. So you have, let's say, we'll have trader A here, okay, and then we'll have trader B, okay. So trader B, let's say trader A is risking a 2-to-1 ratio. Okay, meaning they're trying to gain twice as much as they're willing to risk. Okay, the trader B is pretty much risking, let's say, a 1-to-2 ratio. So they're set to gain one. Let's just say they're set to gain $50, but risking $100. I'll use that example. Okay, So let's look at this. If we have 10 trades here, and we're going to break this down. Okay. Trader A took 10 trades, and Trader A only won 40% of their trades. Okay. And then Trader B won 60% of their trades. Okay. Now, based on that, let me know in the comment section, guys, who do you think would be more profitable at the end of 10 trades? Trader A or Trader B? Let me know in the comment section. Who do you think would be more successful at the end of 10 trades? Trader A or Trader B? Let me know in the comment section, guys. Let me know. Okay? Trader A or Trader B? Based on their winning percentage and their risk to reward ratio. Who do you guys think? Trader A or Trader B? Okay? And I'm going to break that down while you guys are doing that. All right? So let's look at this. So if you have 10 trades, and let's say, and I didn't mean to erase that, but that's okay, guys. We know what the numbers are. All right. So let's say for Trader A, they took 10 trades, and let's just say the first one they won 100. Let's say the first one they won 200. So it was a win. Okay. So we have a win, we have a win, we have a loss, we have a loss, we have another loss, we have a win, we have another loss, we have a win. Okay, so how many is that? 1, 2, 3, 4, 5, 6, 7, 8, and the last two were losses. Okay, so if for every win, Trader A had $200, and for every loss, they lost $100. Okay, so that means that they lost, let's see, it was 6 losses, so 6 losses here. Okay, they lost $600. Okay, with every win, they had 4. They made $200, so they had 4 wins, so they won. Okay, so 4 W's. They won $800. So if we look at the difference between the two, Trader A was still profitable at the end of the week. Okay, Trader A was still profitable at the end of the week. All right, so that's Trader A. Let's look at Trader B scenario. Okay, let's look at Trader B scenario. Let me see if it's in the okay, Trader A. So Mary said Trader A. Good job, good job. So let's look at Trader B to confirm your answer, Mary. All right, so let's go to Trader B, and let's go here. Let's see. Okay, so Trader B won 60% of their trades, but for every win, they won $100, and for every loss, they lost $200. Okay, so that's our setup right there. All right, so now let's say they won. Okay, went on a nice little winning streak here. Took a loss, won again, loss, and then won. Let's see, 1, 2, 3, 4, 5, 6, 7. Okay, we have 1, 2, 3, 4, 5 wins. So we'll make this one a win, 6 wins, and then the rest were losses. Okay, so 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. Okay, so in this example, we can see that we have, so basically they would have won $600, okay, because they had 6 wins. All right, but remember their losses is $200, okay, and they lost 4. So in this case here, they lost $800. Okay, so with the $800 loss, that put them at a deficit at the end of the week of $200, negative 200. So Trader B won more than Trader A, but was still in the negative at the end of the week. Trader A won less trades and was profitable at the end of the week. And so what this basically illustrates is that risk to reward, your risk management has to be a focal point for you guys to continue to grow. Okay? Risk to reward has to be a focal point to continue to grow. And as I'm saying this to myself as well. When I say things to you guys, I'm talking to myself too, right? But that's the focal point here. Okay? So when we are looking at our setups, let's say for instance, if we're looking for a buy here in this area, and it's 9:10 now, guys. So we have about 20 minutes until market opens. So let's look at this setup here. If we're looking at, let's just say a long position. Let's say we enter somewhere here. Okay. All right. So our stop loss would probably be probably somewhere here, 21,237. And then our take profit would be here, about right here. Okay. So 21,345. All right. So automatically we can see right here our risk to reward is 2.18. So that means we're over a 2-to-1 risk ratio, which is good. Okay. So let's look at the numbers on what that looks like. Okay. So let's go ahead and let's go to create limit order so you guys can see the numbers on that. All right. And we can see here. So if we put in 3 contracts at a take profit, right, and our stop loss, based on where we are here, we would risk 204 to gain 400, potentially gain 444. So we're in position to potentially gain twice as much than the amount that we're willing to risk, right? And if you're just using your standard, if you're using your standard ticks, let's just say 200 ticks, okay, you can still see based on the distance, right? Let's see here. Okay, so let's see. Your stop loss, you're still at a 1-to-1. Okay, and this is if you want to, if you're trying to get used to putting in the exact numbers, because you're going to adjust this as you get into the actual trade, right? Because our stop loss was actually dragged up here. So, and then our take profit was up here. So when you make those adjustments once you're in, the numbers still pan out. Okay. So that's what we're looking at, guys, a potential setup. All right. So we have, it's 9:11 now. Okay. And yeah, we're waiting for our signal here. So we're waiting for our signal. Let me see here. Make sure I'm not missing anything. Okay, so Mary, you were absolutely correct about trader A. All right, you were absolutely correct about that. So that's a great analysis from your end. So let's see what we get in the next 15 minutes or so. It looks like price is trying to find support. Okay. It hasn't broken through our 21,267 level. We are approaching, remember what I said as far as step 2, I want the 5-minute to align with the 15-minute. And we can see that the 5-minute here is approaching the oversold area. The 5-minute is approaching the oversold area. So of course, when we're oversold, what are we looking for? Buys. Okay. We're looking for buys. So here we have price came here, found support, bounced up. That's our floor. This is our floor right here, right now, guys. This 2167 key level is our floor. Okay. Price is back at this area, and it looks like it's trying to find support again to potentially bounce up. But we have to wait to see what price wants to do here. Okay. Does it find significant? Do we get a nice strong bullish candle as a layer of confluence to give us confidence that it's going to go up, or is it going to break through? Okay. Bullish candles just basically means a strong green candle. A strong bearish candle is a strong red candle. Okay. All right. And so that's how we look at that. So for those of you all who aren't familiar with setting key levels is just basically where you see significant buys and sells that happen multiple times at a certain price point on the chart. Okay. So I'm just going to walk through that while we're waiting, and we'll go through that. Okay. So if we see here, we see that there are a lot of sales at this area. There's a lot of resistance here. A lot of resistance. Okay. We see here, there's a lot of buys in this area. A lot of buys. Okay. So if we see price react the same way, near the same price level, that's a key level. That's telling us that there are significant buys and sells in that area, and we have to respect that. The market never just moves straight up, and it never just moves straight down. Okay? There are pivotal areas and pivotal price points that shows us that there are buyers and sellers in the market. Okay? And in this case here, there are a lot of buyers here at this level, and in this case here, there are a lot of sellers here. All right. So those are the things that we have to be conscious of when we're setting up our charts. You should never, as a trader, trade without having your key levels already set. I'll repeat that again. You should never get into a trade without already having your key levels set and marking up your charts. Okay, that is very important. Okay, trading without your key levels is like running blindfolded into a brick wall. Okay. You can't just run and expect that you're going to have a clear path. You have to know where are your cautionary areas and what areas you need to basically be cognitive of that they're going to be buys or sells. Okay. So that is very, very important. Every day before you get onto the charts, you should be marking up your charts. If you are not doing that, please make that a habit of doing so, because that is going to help you out significantly, especially when it comes to setting your stop loss and your take profit areas. Your key levels is kind of like your roadmap for that. Okay. Take profit 1 is typically the next key level. Take profit 2 is typically the key level after that. All right. And your stop loss is typically the opposite direction. Okay. So that's the basis of your key levels, guys, and why it's so important. Okay. So it's 9:16 now. All right. So we have 3 minutes and 25 seconds left on this specific candle. And we're going to see if we get a buy signal soon, or even a potential sell. Let's see, we could break through. Okay, so we're being optimistic about it. Of course, our directional bias is a buy, but we are being optimistic about what the market wants to do. We let the market tell us what it wants to do versus um, just kind of jumping to conclusions. Okay, so yes, we have directional bias, but we keep our eyes and our ears open for potential breakthroughs. Okay, so we talked about risk to reward, we talked about setups. Now let's talk about funding. Okay, so with funding, that's one of the things that traders kind of struggle with when it comes to after they develop their skill set, is having the amount of money needed to make a substantial amount of money from the markets. Okay, and so what myself and the other students in Blue Chips Academy are doing, we're doing a $50,000 to $750,000 challenge right now. Okay, so the goal is to have at least the first combine passed by February, and try to scale to 750,000 between March and April. Okay, so with Top Step, all right, and I really love their platform. Okay, so they allow you to it's a prop firm that allows traders to trade futures, and if you can prove that you're a good trader, well, they then allow you to trade off of real funds. Okay, so I'm going to basically go over the breakdown of how that works while we're waiting for our trade. Okay, so with Top Step, you have different subscription levels. Okay, and with these subscription levels here, you have you can pay $49 a month for access to a $50,000 trading combine. You can pay the $99 for access to the $100,000 combine, and then the $149 for access to the $150,000 combine. Now, once you pass, you can scale it up to 750,000, which is basically multiple accounts at 150, or however you want to divide it up. Um, And basically you could use their trade copier for that. Okay, so you have a master account, you take your trades here, and then it's copied to all the other accounts that you have your subscription for, which amounts to about 750,000. Okay, so that's how that part works. Now, what Top Step is saying is that if you subscribe, okay, for this $49 per month, you get access to this $50,000 trading combine. If you can grow this $50,000 account to $53,000 as the profit target, then they're going to give you an express funded account, which basically allows you to trade and earn profits off of your gains. Okay, you can use a maximum of 5 contracts per trade, and you can't lose more than $2,000. Okay, so the daily maximum limit is $1,000, but the total maximum limit is $2,000. Okay, and that's the same thing for 100,000. As it increases, the amount just increases for each account. All right, now I always say, even though the daily limit is 1,000, I would say try not to risk no more than $300 to $500, so that way you don't cross that threshold and breach your account. Okay, but with proper risk management and consistency and discipline, this is very attainable, guys. This is very attainable. I was able to do this in 3 weeks. I was able to do this in 3 weeks. Okay, just by making sure that my setups were basically in position to where I could gain more than I would have potentially lost. Okay, so that's what we're doing, a $50,000 to $750,000 challenge, and we are all in process of making that happen. Okay, so I'm going to navigate back to the charts here. We're at 921, and let's see what we are looking at, guys. What we are looking at. One of the things while we're waiting as well is also mastering your trading psychology. Okay, that is, it's challenging, right? Because we have certain emotional habits about money that we might not even fully realize until we started trading, right? And so when you recognize that and you understand how to fix it, that's when you start to see your growth. But how do you fix it, right? So one of the things that I struggled with early on was revenge trading, right? I didn't like to lose, and I just wanted to make everything that I lost back in that session or in that day, and that's not realistic. Okay, so one of the things that we go over in class, we read a book called Emotion Free Trading, and so I read Revenge Trading, that specific chapter, over and over and over again. And I wrote down every time I indulged into revenge trading, what happened. I blew the account, or I lost a significant amount, or um, basically I had to start back from scratch, right? And so eventually you get tired of indulging into those behaviors, and you say, you know what? I'm going to do better. I lost today. That's fine. Let me just start back tomorrow and I'm done for the day. Okay. And so, whatever emotional, um, I would say, challenge that you all are dealing with, you have to condition your mind. Okay, you have to condition your mind. Same thing like everything else. When you first start driving, you're thinking about every step that comes with it, right? But eventually you start to drive and you're not even really thinking about it too much, right? Because it became a habit. And so the way you're thinking now, your thought process now, is not going to be the same thought process that gets you to that 500,000, that gets you to that 750,000. Okay, so there has to be a shift in your thinking in order for your results to shift as well. Okay, there has to be a shift in your thinking in order for your results to shift as well. So that's very, very essential. So whatever you're dealing with, whether it's risk management, whether it's fear of trading, whether it's greed, whatever it is, lock in, focus on that. Read the chapter every day before you even open the charts. So if you know you have to be on the charts at 8 o'clock, start preparing at 7 o'clock, 7:15. Read your chapter, set your and it looks like we're getting a potential buy signal coming in too. I'm gonna hop to the charts in a minute. Um, read your chapter, write down your rules, set your key levels, and now you're ready to trade. If you're not doing all of that before you're trading, you're hindering your growth. You're hindering your growth. Okay? And start to journal. I'll talk about that soon because I actually have a journal for anybody that's open to it. Okay, that'll be released very soon. But that's what helped me, because with the what the journal does is it helps you to reflect on what you're doing. Okay, because you can feel however you're going to feel in that moment, but when you go back and reflect and you look at what you put down, you're like, okay, you know what? I probably should have done this better. And now you have a focal point on how to get better the next day. You only need to get better 1% a day. Just the same way you have compound interest, you have a compound behavior as well. Okay, so let's look at this candle that's coming in. We got 4 minutes left on this trade. I always say let's wait till the candle close. Okay, let's wait till the candle close. But we're in great position. The 5 minute is oversold now as well. All right, and we're going to see what happens. We have 5 minutes until market open, guys. 5 minutes until market opens. So if the candle closes strong by like the last minute to like 30 seconds to minute left in the candle, then I'll go ahead and look into getting into a buy. And what I'm looking at right now is a potential YW. Okay, potential YW. So we could possibly retest this area here. We'll see. We'll see. Because price can do whatever it wants, whenever it wants. All right. But I hope you guys definitely took some notes on that trading psychology piece, because it's essential along with our risk management. Okay. So let's see what we have here. And with the trading journal, guys, that's literally, I'm just sharing my process on what happened, what helped me. Okay. What I tracked every day and how to adjust. Okay. Because whatever you track grows. If you're not tracking it, don't expect growth. Okay. You have to be very intentional, and you have to get organized with your trades, right? You can't thrive in chaos. Okay, so we have to be organized with not only our results but also our thoughts. Okay, master your thoughts, master your results. All right, so we have 2 minutes and 55 seconds left on this candle. And for those of you all that doesn't know what the timing looks like, here's the time over here. Okay, that tells us how much time we have left on the candle. So this buy looks pretty healthy so far, but we still have a lot of time left on this candle, and we're going to let price tell us what it wants to do. Okay, so we have 2 minutes and 30 seconds left, guys. 2 minutes and 30 seconds left. All right, and we're going to see what the market gives us today. All right, so because I'm liking the way this candle is looking, I'm getting prepared for my buy already. Okay, so I'm going to go ahead and click buy. I'm not in the trade yet, but I'm getting prepared. Okay, I am getting prepared. All right, so let's see if it closes out strong here, and then we'll go from there. And then you can also use this measure tool as well. So this measure tool right here, okay, if we measure it from here to like about right here where we would set our stop loss, where price is, that tells me that we're at like 197 ticks to our stop loss right there. Okay, so we're just waiting. We're waiting here to see how this candle closes. Does price want to buy at this level, or is it going to break through? Let's see what we get. Okay, we got 1 minute and 23 seconds left, and let's see what the market presents to us today, guys. Okay, but I am set. All right, let me put I'm just gonna put 250 for my stop loss, and I'm gonna put 250 for my take profit. Okay, and I'm risking 3 contracts here, right? So if we look at this long position setup here, we got 50 seconds left. Let's see what we get here. Yeah, so we got 161, about 100 and I'll say 75 ticks for our stop loss, and about 100 and 260 for the take profit. All right, let's see here, guys. 24 seconds. So I'll put 175 for that. Okay. Let's see what we look like. Not bad. 13 seconds. All right, I'm getting into a buy. I am in a buy right now. Okay. I'm going to move my stop loss down just a little bit though, because that's a little tight for me. All right. So I'm at, how many ticks am I? Okay. So I'm in a buy right now. All right. And let's look here. Let's set our TP here. Okay. So we're at about a 1-to-1 right now for our ratio. We're at about a 1-to-1. Okay. So TP1 is 21,346. And then I am going to set another position here for two contracts. Okay. And then I'm going to go ahead and buy there. Okay. So I have my two positions in. Okay. So I have my stop loss should be the same. Your stop loss should be the same. Okay. And then my TP2 is going to be here at 21,398. 21,398. Okay, so I am in the trade. Market is open. It is 9:31. And let's see how we do today, guys. Let's see how we do. So let me go ahead and put those numbers into the chat here, in our private chat. And let's see how we turn out for today. Okay, we getting some pushback here. Let's see if our level holds. It might break through. Let's see. So we have a stop loss is at, let's see here, 21,243. Might be getting stopped out here though. The sellers are coming in. Yep, just got stopped out. Okay, just got stopped out. So here's where we make the adjustment. Okay, so now if this candle here closes, right? If this candle closes, now we're looking at a potential sell for if it closes strong. All right, it has to break past here though. Okay, it has to break past here. Right there. There's our support right there. Okay, if it breaks past there, then that's a decent sell right there. All right, that's a decent sell right there. So let's see what happens. Let's see what happens. Okay, so this is where being objective in the market. Okay, didn't win that first trade. Let's get ready for a potential second entry there. Okay, let's get ready for a potential second entry. So let's see what we have. Let's see. Okay, we got 2 minutes left on this candle right here. 2 minutes left. And it looks like it's trying to find, it might be finding support. We'll see. This might be a stop hunt right here. So a stop hunt will be price to kind of fake out one way to take out the stop losses and then go into the next direction. Okay, so if you're still in, this is still not a bad trade right here for a buy, but we'll see if it breaks past this area right here. Okay, so we got a minute and 40 left. Minute and 40 left. And let's see what we get, guys. Let's see what we get. Okay, minute and 25. This wick right here is showing me that there are some buyers in play right here. Let me zoom in a little bit. There are some buyers in play right here. Okay. And if we go back to our rules right here, we'll see, right, that we want, if price is oversold, then we are looking for potential buys, which is what we were looking for here. Okay, so that wick on that candle, and I'm gonna switch over real quick so you guys can see that. 1 second. Okay. Let's go back here. Yeah. So this might have been a stop hunt, but we'll see. Let's see. Let me switch over back to this. Make sure you guys can see the chart here. Okay, there we go. Yep. So yeah, so we'll see, guys. We'll see if this thing is not. It did break a little bit past the level, but we'll see. It looks like we're getting some strong momentum here, though. Price might not be. Yeah. So this might be a good sell, but I would want price to break past this level here before deciding to get into a sell. Okay, because that wick at the bottom of that candle is telling me that there is still some support here, but we'll see what happens. We'll see what happens. Okay. All right, here we go. Here we go, guys. 4 minutes left on this trade. So if you didn't get stopped out, you should still be in a valid trade as long as we hold this level right here. But the stop loss would be, it was actually at the 21,248 level. But if you're still in, you're not that far off from it. Okay, we're getting a break here. Let's see. Okay. All right, I'm going to go ahead and get into a sell, guys. That's a strong candle there. That is a strong candle. So I'm going to get into a sell. Okay. All right. So this sell here, so if we're looking at the levels here, we can see, I'm going to put the stop loss. The stop loss is, where are we? 21,267. 21,267. TP1, I'm going to drag this one down to TP2. But TP1 would be 21,197. And then TP2 is 21,138. Okay, so those are the two levels right there. And I'm going to put that in the chat for the sale. Okay, so I'll put those numbers in and let's watch this trade, see how it does. Remaining objective. Okay, so stop loss is at 21,276. 21,276. And then our TP1 is 21,194.75. 21,194.75. And TP2 is 21,138.75. Okay, so TP2 is 21,138.25. Okay, and the way that we know this is this is basic. Those are price levels. Those numbers that I'm calling out are the price levels. Okay, so if you want to adjust, you just click here, and then you adjust or you can drag it down to that price level. Okay, so that's where we are. All right, so we're currently in the sale. The buy didn't pan out the way we wanted it to, and then okay, so abundance protocol. Number one, thank you for hopping on. You said I would like to trade just one of your sessions together. How can that happen? Okay, so I'm always here every Tuesday, all right? At 8:45. This is the pretty much the free session. I am live every day though, in our private chat at 8:45 every day. So if you wanted to join the academy, you can. If you wanted to just try out and trade for free, you can do that as well and just join us every Tuesday. Um, if you don't already have one, create a trading view account, a free trading view account. And once you have your free trading view account, you can paper trade. Okay, you can paper trade, and that will allow you to take demo trades and kind of practice on how to get in and out of trades. So that's one of the ways that you can kind of do that abundance protocol. You can either hop on with us every Tuesday, and you pretty much just trade with us for free, or you can join the Blue Chips Academy and trade with us every day and really get that training and that guidance to help you to continue to be a successful trader. Okay, but those are the options. So thanks again for joining, and if you have any other questions, please feel free to ask. Okay, I hope I was able to answer that information for you. And then all the links and stuff should be attached to this video, bluechipsacademy.com. Join our Telegram as well so you can stay connected. And yeah, I look forward to, regardless of which route you decide to take, I look forward to building with you Abundance Protocol. Absolutely. Absolutely. Okay. So let's look at what let's look at the trades here, guys. See how we're doing for today. And let's see if we can at least get to TP1 on this one here. So TP1, let me move that up. Hold on one second, guys. TP1 is here, okay? And TP2 is here. Okay, I already put those levels in the chat, but those are our levels there. Okay, and we'll stay on for about another 5 to 10 minutes, at least until TP1 if we hit that. And yeah, we'll go from there, guys. We'll go from there. Okay, so let's see what we have today, guys. Let's see what we have. All right. If you have any other questions, please feel free to ask. Please feel free to ask. But right now, I'm in a sale. And I'm sorry, guys. I thought I had pressed enter to send the information, but I typed it, okay? But yeah, we're in a sale. And it looks like price is moving in our favor here. Price is moving in our favor. It looks like TP1 is vastly approaching. So let's see. Okay. TP1 is vastly approaching here. All right. So we got about 3 minutes and 15 seconds left on this candle here. All right. TP1, guys, should be hit. TP1 should be hit. Okay. So typically what happens when TP1 is hit, I like to bring my stop loss to break even, just looking at the spacing of it. Now, considering where we are right now, price did find support here. So we have to be cautious of that. But it looks like the sellers has some really good momentum here. So we might be able to break through this threshold right here. But TP1 definitely hit. So what I'm doing is bringing my stop loss to break even to protect the profits that was already made. Okay. And then go from there. Okay. But that's it, guys. So just go ahead and manage your account. Again, we're here every Tuesday, 8:45. You can lock in with me. Join the Telegram channel to stay connected, guys. And I look forward to building with all of you guys. Great trade, great sale. You guys should be locked in, and it looks like we might be able to hit TP2 as well. Let's see how much momentum the sellers have for the rest of the morning. All right. I appreciate y'all. Let's continue to build. Okay. Next Tuesday, same time. Feel free to invite whoever you want. This is open information here. And you guys have a wonderful, wonderful Tuesday. Make sure you like, subscribe, and I'll catch you guys on the next one. We got a nice drop here, guys. So follow your trade. Talk to you guys soon.